Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Joel Elconin, co-host of the Benzinga Pre-Market Prep Show, also editor of the Pre-Market Prep website. Now, Joel, look, this seems to be a pretty good environment for investors broadly here. The dollar, as of today and really over the last couple weeks, has been dropping again. Rates continue to move lower. The 10 years back at about 4.3%. It wasn't that long ago that we were talking about the 10 year at 5%. That's turned around quite quickly, and markets are consolidating at generally higher levels. We've also seen a nice move into the precious metals recently, and even some of those stocks. Bitcoin's even up today. So overall here, Joel, is this just another story of the US dollar moving down and everything, including bonds, getting a buy, which then pushes down yields, and investors feel like they're in the clear to put money at play into more risk on assets?
Yeah, well, first of all, gentlemen, thanks for having me today. I think of all the things that you mentioned, the bond market had really been ailing the stock market, and the fear of higher rates, inflation, and the numbers have not been super impressive. But when you look at where we've come from and the amount of time that we've come down, it's a welcome relief to investors. You also had, crude oil coming down. I saw that gasoline prices were down for 60 days in a row. So the consumer, getting a little bit extra money in the pocket coming up to the holiday season. I mean, seasonality, favors the market, and you're getting the dollar, and the bonds to cooperate.
Well, and Joel, with the bonds getting a bid and the rates pulling back and the dollar continuing to pull back, it's not just gold that's up. We're seeing almost the entire commodity sector up, including oil. So I don't know how long people get the break at the gas pump, but we're seeing copper up, platinum up, palladium up, aluminum up. Everything is up today. Do you think that that's an interesting narrative, considering all we've been hearing about is people worrying about recession and worrying about demand shrinking, and yet we're seeing, a bid across all the raw materials?
I mean, the consumer has been resilient, throughout this whole time here, and the primary factor is the weaker dollar. But a lot of fears of the recession are just not coming to fruition. At least now. I mean, you are seeing some data come out, but man, the consumer, they're still spending, they're still out there, they're still traveling, they're still doing things, building things. And in order to build things and get the economy going, you need the raw materials, you need the commodities. So that's where the strength is coming from.
Yeah, we've also heard about some movements in China too, freeing up more money to that could support the commodities sector. But one thing that is also catching my eye here, Joel, is right before we started recording, the VIX, the volatility index, just went to the lowest level that we've seen since early 2020. So pre-pandemic levels. I guess that just goes to show that investors are comfortable putting money at work and that broadly the Fed is done. So now they think that the worst is behind them.
That bodes well for the market, right? I mean, you had your volatility back in October, and when you haven't had like the big, really any big down days. I mean, today we were down what 15 handles, but there's no fear in the market, and I think a lot of that stems from that the economy is still resilient. And if the Fed's got plenty of ammunition, if in fact the economy starts to slow down. So yeah, consumer confidence seems to be hanging in there. Holiday season, market's been good to people. They have the little extra money to spend on holiday gifts, and the most important thing is the seasonality, and this is typically a strong part of the year.
Well, Joel, just to that point about seasonality and the consumer, a lot of focus today has been on how Cyber Monday went yesterday, how Black Friday went last week. And it looks like there were some pretty good results from certain, depends on the retailers, but retail sector is definitely in focus. And they said that they think American consumers possibly did over 12 billion of sales just yesterday, maybe an all-time high for a Cyber Monday. So do you think that bodes well for the retail sector?
I mean, you've had some surprises in the retail sector, and they started the discounting, and they started it pretty early, and so maybe you're getting a little pull forward in some of the sales, and maybe the going later into Christmas is not going to be as strong. But Shopify did extremely well. Etsy, when you think about buying online, you think about Amazon. Amazon has had a nice move as of late. And I just think this is all, just all points that, the consumer, is resilient and still willing to spend money, even if they have to go, buy now, pay later. Look at a stock like a firm has had a nice move as of late. So even if the people don't have the money, they're willing to willing to finance it a little bit farther out. So, how long this Rosie's scenario can continue will be determined in 2024. But once again, with rates at these elevated levels, if you do start to see the economy slowing down or any kind, GDP really backing off, well, the Fed's got you got the Fed put, and it's there in the market, and people are leaning on it.
So, Joel, how do you balance out this more bullish outlook for broad averages, the U.S. markets that continue to do quite well, but then also the breakout that we've seen in gold and also in Bitcoin? Both are continuing to move strongly today.
Yeah, could this be finally the time where gold puts 2000 in the rearview mirror? Sure looks like it, up $28 today. Bitcoin, I think that it's become an alternative. The banking sector, the banks have had a nice rally, but it's an alternative. And will it ever be the main currency? Well, no, but people are looking at it as a storage of value. So when the bull is out and it goes across the board, then you get these kind of moves in the market. So I know you guys have a lot of gold fans on the Corlin Economic Report. So I'm sure they're enjoying this rally very much.
Well, Joel, there's a lot of people that have retirement money tied up in the markets too. So we always appreciate getting your technical look on things. You're a great technical analyst. Is there any levels you're watching in the S&P 500 that trip your trigger either on a resistance or support basis?
Oh, I mean, the key to this rally, I mean, it's just it couldn't be more evident. Just going back over the last 5, 6 trading sessions, you've had just several highs, and I'm just going to call it the 45.75 area. This is basis the futures. That encompasses the last one, two, three, including today, the last 6 highs in the market, with the ultimate high of that range being 45.80.50. Now, knocked on the door several times. If in fact the market can clear that, you've had a run up, you've had a consolidation, then I don't even think you blink at 4,600 and you work your way up to the 4,650 level. As far as support goes, the lows have kind of been in the same area, not as well defined. But if you look at your pre-Thanksgiving low at 45.43, I think a lot of technicians were looking for that today. Well, they stepped out at 45.47. So this is called 45.40 on the downside, would lead to perhaps a test of 4,500. But the onus is really on the bulls to take out that high from last week and get us into the 4,600 handle.
So, Joel, since we're looking at that S&P chart, do you worry that it's moved too quickly to the upside, rebounded throughout the whole month of November? The S&P is up almost 9% just this month. It's almost been a straight up move. Does that worry you a little bit?
Of course it does. I worry about everything. But, one thing that when we discussed earlier is, the VIX coming down, the average daily range is coming down. So, you just have to pick your spots. And, right now, the Bulls are still in control. The Bears have really not made any major attempts to break the market. The only thing I will say is that of the 4-week rally that we've had, last week's percentage and handle gain was the smallest one. So that's like really the only negative thing that you can say. But then you look at like where the S&P was, 4150, 4200, to start the month. up at 40, now knocking on the door at 4,600. You got to have a little bit of a cooling off period at some point.
Yeah, and maybe that's what we're seeing this week too, with a little bit more sideways action. But boy, oh boy, it's been a very fast rebound through this whole month. And it leads us right into the end of the year. So hopefully it makes people, some of the investors, feel a bit better about themselves for a year that has been a bit better, especially when you compare it to last year. Joel, thank you as always for your time. Interesting to hear your comments, and just better to see green on the screen day after day and almost across the board. So Joel, thank you very much for your time. We'll chat again, hopefully next week.
All right. Thank you, gentlemen. We'll talk to you soon.